Okay, so another one is that the second, okay, this is a very important that I want to highlight. The second pillar is daily care management, operation, and maintenance. So it sums up in 5 words: ensure, value, safety, and comfort. So what I want you to notice when you see me how I explain it to you, I want you to notice the order of these 3 words, okay, appear in. Value comes first, safety comes second, comfort comes third. Why? Okay, before we go into more details here, how much the unit, the property value that you purchase for strata properties? There might be some people saying that 100,000, 200,000, 400,000, 500,000, 700,000, 1 million. No matter how much is the value for any owners, that value, whether it is 100,000, it means so much to you. Especially, it's not even included your loan repayment. It's a lot. We are talking about 100,000 value of a property. So that order is not accidental. It is the single most important mindset that I want you to walk away with from this session. Keeping value as the number one, and then safety and comfort will come along. So many managers and many committees unintentionally, okay, you are not intentionally flip this, but you are unintentionally flip these orders. You will start with usually, okay, this is in real case situation whereby usually many committees and managers will start with comfort, what resident can see and feel day to day. And then they think about safety, what keeps people physically protected. So the value, the long-term worth of the asset becomes your afterthought. When something happens, only then you realize that, oh, our property value in 5, 10 years, how does it will look like? Whether it will appreciate or depreciate. Okay? Especially when it is time for you to sell lah. So I want to challenge that order today. And especially in these 2 days training. All right? Value should be the mindset you start with every time you make a maintenance decision, a budget decision, a daily care management decision. Here is why. When you protect your property value first, you are automatically forced to maintain quality proper materials, competent contractors, real preventive maintenance schedules. So, in our daily life as a committee members or even as a property managers, we are often overlooked on this. Whereby, when we talk to people in the AGM, we are too overwhelming with our own tasks. We tell the people, oh, we need to increase the maintenance fee. We need to repair this defect. We need to, but you need to remember, most of the owners, okay, only maximum 14 members of the total 700 owners will have this in-depth of the situation. But most of the owners, they are not in that situation whereby they see you are in deficit, you are in having a building defects and all that. They are not in that situation. But what is the common situation that all of you have? Your property value. The most concern of all the owners, if you have 700 owners, the most concern for all these owners is their repayment monthly to the loan bank, their properties, if let's say in 5 to 10 years they want to resell or they want to give it to their children's, will it increase from 400,000 to 500,000? That's why before you are talking about what need to be done, what need to be amended, repaired or anything, you talk to the people about the property value, the value first. So when quality is maintained properly, safety, it will follow naturally. Trust me. Because a well-maintained lift, a well-maintained fire system, a well-maintained structure is inherently a safer one. Okay? And plus, when you talk about the value first, you will have less arguments in the AGM. People will understand that whatever decision they are going to do, it will affect their purchase price of the units. Okay? So when safety is solid, comfort follows too because residents they feel secure and cared for in a building that is functioning as it should. So value, safety, and comfort, they are not three competing priorities fighting for the same budget line. Okay. But whatever you are doing, value is put the value first, and then safety and comfort are what grows out of it. Daily care management, okay? So it means like this happens continuously, this daily care management. It not once a year, not before an audit, only before an audit you do the daily care management. No, it happens every day. Inspections, preventive maintenance, service records, defect tracking. It happens in a daily basis. So you need to have this mindset, okay? So if you have this a good mindset, most strata properties either quietly they will gain in value over 10 years, 5 to 10 years. You will see your property value keep increasing. People will be so interested to purchase your property in a double value of what you purchase right now, or you will quietly lose it depending on whether this pillar is taken seriously or not. Seriously, there are strata properties, even you are purchasing at 700,000, but then when you want to sell it, the market value is only at 400 or 300,000 because you forsake this one, the value. Okay? So the factor management is a really straightforward. It enhances the property value again and meets legal obligation. All right? So it means effective management means you, committee, and the manager, you are not just reacting to the problems that you have, but you planning ahead. Before the problem arises, you planning ahead, long-term sinking fund planning, major repair forecasting, regular review of the maintenance fee, and also against the actual cost, okay? Your OPEX, your CAPEX. So this means transparency with owners because owners understand, oh, when you have effective management, most of your owners, they will understand where their money goes. And it far more likely you will gain their support for any decisions just to protect their asset. So this is how you want to ensure that in any AGM, in any EGM, you are not going around circles to fight, to having a non-stop arguments, 3, 4 hours. I even have attended one of the AGM goes until like 2, 3 p.m. since 8 a.m. in the morning. It is not effective to have that kind of situations, okay? So legal compliance, where applicable, awareness of it means like any legal compliance such as the Strata Management Act 2013, STA 1985 where it applicable, and increasingly awareness of your own limitation periods. This we will learn in module 4 tomorrow. Okay, liability exposure. So committee and management, you also are protected when you handle it through these three pillars. So over these 2 days, every module we cover governance, finance, maintenance, risk, dispute resolution will sit under one of these pillars. I want you to keep this with you until the end of the sessions and until forever lah when you manage, when you become a strata owners, okay? So I want whatever decision you are facing as a manager or committee members, always ask yourself first, does this decision protect and grow the value of this asset? Remember, you are managing an asset. So in module 2, I will elaborate more, explain more how this asset is a very crucial. How expensive is this asset actually? So if you, when you ask yourself, does this protect and grow the value of this asset? If you can answer yes, you will almost find that safety and comfort come along with it. But if you start by chasing comfort alone, you will find yourself continue consistently fighting with the residents, with the owners, with your own team. Let's say you want to keep fighting, chasing after the comfort. There will be a people. Oh, I'm a pregnant mom. I want there is a it is This is a true scenario. I want a specific pregnant lady parking in front of the lobby. I want it to be designated. So if you keep going for the comfort, you will satisfy no one. Same with the safety. If you keep going for that one, you will satisfy no one. But when you go for the value first, you will satisfy everyone. Okay, so that's the mindset we are building over these 2 days. So let's move into our first module. Okay, all right. So just like Okay, just like what I mentioned earlier, that one is actually the summarize of everything. So for if you want to look at, you can look at our Malaysian Property Management Standard (MPMS). Okay, this is one of the guidance and guidelines that can be used. Even here, instead of talking a lot about this, the whole definition and all that, I just want to highlight the key point. In whatever situation, the purpose is to protect owners' investment. Okay, you are not just managing a property, a building, or whatever your residency name's called. You must remember you are right now like a stakeholders having your own investment and assets to protect. Okay, and your stakeholders are a lot. If your building has like 1,000 plus owners, that is 1,000 plus stakeholders that you are answered to. Okay, remember this. And then under this, there is the summary whereby one is a monitoring outgoings, obviously, review and control expenses, and then lease enforcement, okay, tenants to comply with lease, um, breach of the house rules being handled properly for the tenants, and then appropriate insurance coverage. Okay, this one also I will just briefly touch about it later. Budget preparations, develop and maintain. You need to remember you are the one who need to develop and maintain annual budgets, track expenses also. Sales and purchases advisory. Okay, if there is any potential real estate transactions based on the market conditions and property evaluations. And also upgrading emerging interest. So 1, 2, 3, 4, 5, 6. 6 items in summary under the MPMS earlier. If you want, you can either purchase it or having an online lah to read through the MPS one, Malaysian Property Management Standards, if you want to learn more. All right. So this is an overview the regulatory frameworks that we have within the strata management itself. But at the same time, this is the main one. But actually, there are a lot more of legal and frameworks that actually framing and regulated this industry too. But what we want to focusing right today is first foremost the one that regulates the professions. Okay, your property managers, your building managers, the ensuring that practitioners meet the required standards are BOVIA in short form we call it, or Valuers, Appraisers and Estate Agents Act 1981. All right, and then we have the Housing Development Control and License. So this HDA is governs housing development activities. So your SMP, sales and purchase agreements, all of that is under the HDA Acts. And then before we have the current Strata Management Act, we are actually start with the Strata Titles Act 1985 STA. So this is the one that introduces strata titles, allowing share ownership of property. They are certain like the one that we are still using. One of it is the requirements of aggregate 25% share unit for you to establish the management corporation. So that one I will teach you later also. So that means even though now we are using Strata Management Act 2013, but not everything under the STA is being repulsed or not being in use anymore. It coexists together. It's just some parts are amended in a better ways in the Strata Management Act 2013. So one of the good thing about Strata Management Act 2013 is because of back then there is no requirements for the subdivision, strata titles and all that. So people will have a difficulty of proving that they are owners of the property for them to sell the property. And that's why there are still many properties also under the JMB, uh, JMB, Joint Management Body, not Management Corporation. How? I will teach later under the Strata Management Handover Timeline. Okay. So the next is one, the building, and this is a BCP, in short we call it before this, Building and Common Property, Maintenance and Management Act 2007. It provides a framework for the maintenance and management of common property. So after years of having this act, only then the latest one that we have is Strata Management Act 2013 and Strata Management Regulation, Maintenance and Management 2015 to outlines the governance of strata schemes, JMB and MC. But what I want to show you here, okay, from here, the process, okay, the development of act of strata management is actually pretty slow. It took years before it come and force of the new act, whereby that's why whatever actually, even though during this time, I still remember back in 2014 and 15, we very celebrating this new acts whereby we feel like it's some things that could help the industry. So I'm one of the one that need to amend our own internet SOP during that times. But then after years, actually, strata properties is a very fast-paced industry. It's a very fast-paced industry, actually, especially in what how our daily life looks like. Even back then, there is no such thing as a very like common things of food delivery, packages delivery, and all that. But now it's a common things for us. So there are still a loopholes, certain gaps in the current acts that actually not really reflecting of our current um, pace of the industry. I understand that this year KPKT also gathering some of the owners, strata owners inputs to amend or make it a better strata acts of whatever we have. If you come across it or you feel like you have any feedbacks that you feel like it needs something needs to be done, I think you can just share with the KPKT about your own feedbacks. Okay. So other related legislation here, there are a lot more, but I'm giving you only few things here, which is the most common is Uniform Building Bylaw, Section 6, Subsection 1 and 6A Limitation Act, Amendment 2018, 1953, and Street Drainage and Building Act 1974. So this one we will learn in Module 4. We won't go into too much details, but even it's a brief, it's pretty comprehensive for you to learn and understand about this. All right, about the Uniform Building Bylaw, usually it's about your escaping for the fire escape route, your fire seal requirement, FC fire certificate requirements, even your hose reel, if you realize it, your hose reel height and diameter is actually also there is a regulation under the UBBL that you need to check. Okay, because it's also about safety lah, but I think this one I will explain later in the tomorrow module 3 under the maintenance prioritization. We'll talk about it. And then limitation act about account, fraud, patent defects, latent defects, claim. So in module 4 tomorrow, I will explain to you what is patent defects, what is latent defects, what is the limitation timing, okay, for account claims, for fraudulence, for patent defects identifications, okay. So Street Drainage and Building Act, this one also, the one that you're familiar, one is a CCC. I think most of you have heard the CCC, Certificate of Compliance, regarding the building inspection and handover trigger. CCC is under the Street Drainage and Building Act. Periodic structural inspection. I'm not sure whether all of you here aware that for strata buildings over 5 stories building, periodic structural inspections for the building must be done after 10 years of the CCC issuance. So if your CCC issuance is 2026, then you put it 10 years over there. So 2036, you must fork out some budgets to hire for a certified engineer professionals to evaluate and do a structural inspection. So during that time, for instance, DB in KL. So DB KL, if I'm not mistaken, this one is under Menara 3 DB KL. There is a Jabatan Kawalan there. They will send you a letter for you to do these structural inspections and then submit to them. Okay, so this one, if you're not aware, after 10 years managing a building, you will be very overwhelming, whereby suddenly you need to have a high cost upfront to pay for this. All right. And so this one is a very pretty straightforward documents of title. So you will always hear about this master title, individual title, strata title. Master title, what is master title? It is actually for the developer, okay, before they do a subdivision of the land. So if you have 40 hectares of land, and then that one will be under master title, then they need to do a subdivision of the land to subdivide by parcels to issue out individual title. So usually for this, not usually, individual title is actually for the landed unit. So documents of title in Malay, geran tanah lah. So we have a HSM lah, PN lah, all those kind of terms for the geran tanah, individual title. But for the high-rise building, or not even a high-rise, landed building that have a common shared facilities like clubhouse, okay, sharing a tennis court and all that, that one is a land called a stratified land also. So the one that will be issued is a strata title. All right. So under this title, there will be freehold title and leasehold title. So individual title will have a freehold title and leasehold title. Strata title also will have freehold title and leasehold title. So for the, I'm sorry. So for the individual, what is a freehold title? It means like it is in perpetuity. Leasehold means you freehold lah. You have it for perpetuity. For the leasehold title, usually it is up to 99 years. So if you're already living there for 50 years, so the rest of the years that you have is like what, 99 minus 50 is 49 years. So if you want to extend it, you need to go to the state governments lah. So once the lease expires, the property will return to the state government. If you want to renew, there will be certain amounts or portions to pay. So strata title is the one that the high-rise building or stratified development will have. Landed strata or even the high-rise, they will have this strata title. So let us see the comparison. So duration for the freehold is perpetual. Leasehold is up to 99 years. Strata, you can have either leasehold or freehold. But usually in strata, to make it more attractive, developer will give a freehold titles lah for the strata. They will advertise it as a marketing. Oh, this stratified building is a freehold punya pegangan, freehold title. Okay, ownership, obviously for freehold it will be full land ownerships, and then leasehold will be temporary only, up to 99 years. And for the strata, your ownership is your units only as a ownership, and then the rest is a shared facilities. You share together with other people. That's why you are paying maintenance fee. So value, obviously, freehold will be higher. Leasehold tends to be lower. Strata, it will depends on facilities. If you have 50, 60 more, then obviously it will be higher because you need to fork out more money to maintain those facilities. If it's just like 1 to 2 system or basic system, not an advanced system, it will be much cheaper lah. So the restriction freehold will be few, but it depends if there is a caveat and some things. Okay, caveat is CAVEAT. Those kind of thing. There might be a few more restrictions also. So you need to always do a title search. Okay, to check what is the restriction inside that document of title. So for the leasehold, it requires state consent to transfer. So obviously the restriction is a bit higher. And the strata, obviously there is a higher restrictions because of it depends on the bylaw, on the management rules, house rules that you have. Okay. So common key terms. Now we are at 9 p.m. So common key terms, usually in a landed, we call it as a house. House, okay. Rumah sesebuah, something like that lah in Malay. But then in a stratified building, strata buildings, we call it as a parcel. Parcel, not packages. Usually Malay or we in Malaysia, we use how many parcels that you receive today. You are referring to packages. But in our terms for the strata, parcel is referring to a unit. But in Act, usually it will mention parcel. So it's an individually owned unit within a strata development. And then we have a common property and limited common property. So common property are the one that you are used to, areas shared by all the residents, like your lobbies, your lift, corridors, walkways, okay, swimming pool, gyms, car parks, this one all common property. So it's maintained collectively using maintenance fees, while limited common property usually is a designated, the exclusive use is for specific parcels only. Like only 2 to 3 units, the designated privately for one floor, or a storage designated for that floor only, to store their items and all that, or even like a certain floor level of, I won't say it's a rooftop, but there is a specific private rooftop access to like a jacuzzi, okay, or a swimming pool that serve that specific units only. All right. And then you have the maintenance fee, monthly fee paid by parcel owners. So this one is maintenance fee is solely to fund the upkeep and day-to-day management of common property. So it calculated based on the share units of your parcel. This one is based on the Strata Management Act 2013 after the amendment. So the sinking fund. Sinking fund, sadly, I would say there are still many people working in strata confused about maintenance fee and sinking fund allocation. Even some giant or big people lah in the industry. So sadly, this still happen. Okay, might be because of before they join managing a strata, they are not familiar with how the strata works. But you need to remember, sinking fund is a long-term reserve fund for major repairs and replacement. It shouldn't be touched at all until you need to use it for major repairs and replacement in future. Like the one that I said, the periodic structural inspections over the 10 years, lift overhaul, roof replacements, repainting. You need to remember, you need to fork out certain money also for the building repainting. Usually it's every 10 years. Okay. Inside the Act, the set minimum amount is 10% from the maintenance fee. There are situations whereby some buildings, I'm not sure how many percentage, but I have accounted those buildings go through to the AGM and pass through a motion to lower the sinking fund amount to less than 10%. It's not allowed. Okay, that's wrong. So you can increase more or keep it at 10% only for the sinking fund. All right. So that's why you need to remember in any AGM, whatever decision that you do in the AGM is not a final. Even though you said, oh, 100% owners approve this motion and it can be added in the bylaws. But if it contradicts with the act, with the legislation, it can't be passed through. It can be challenged in tribunal and court. All right. So this one cannot be used for routine expenses. Anything, let's say you want to upgrade your CCTV. Usually for the CCTV upgrade, the cost won't be less than 100,000. It will be higher, 100, 200,000, something like more. So that one, you need to do a comparison table in the AGM, get an approval from your residents. Okay. And then building insurance, fire insurance. So under the Act, it is a compulsory, okay, mandatory under the Act, committees or whoever managing a strata properties to ensure that your strata building is insured with fire insurance. So what I want to highlight here, I'm not sure if there are certain people or certain professionals out there, they are still confused, but an experienced or seasons, especially in a banker, okay, they will ask you when you do a sign loan, okay, housing loan, they will always ask you, please check with your building if you have the certificate of fire insurance, and then you share with me so that you don't have to pay to the bank for that fire insurance. Because as a strata owners, your responsibility is to pay your fire insurance to your JMB or MC, not to the bank. So whenever you already pay to the JMB and MC, always ensure that you have a receipt of it and also CI, certificate of fire insurance, so that you can pass that certificate of fire insurance to the bank. Another thing is that usually when you pay fire insurance for your buildings to your JMB or MC, the amount is lesser. The amount is not pretty cheap, but it's lower. It's because of you only pay for your own share units. So if your building, there's a calculation for share unit. So if your buildings is a 900 plus square feet plus one accessory parcels, and then there will be a calculation. Might be it turns out your share unit is about 90. So your payment for the fire insurance might be, your portion might be like less than 100, might be 70, or might be more than 100, but it won't goes until like 4, 5, 700s. Okay, because you are only pay a portion of your own share unit. You are not paying for the whole developments. All right, please remember this. If bank charge you, make sure you get your certificate for insurance from JMB and MC, and then you pass for that certificate to the banker and get them to refund it back to you. Okay, because this one is under the JMB and MC or whoever managing the building to ensure that the building is insured against the fire insurance. So I'm gonna go through quick about the fire insurance. So principle of indemnity, okay, to protect you against damage or loss. This is a fire insurance punya principle of indemnity. It is to protect you against damage or loss, to ensure that when it's recovered, it will be put back in the same position, no better or worse than before. Okay? But limited to your sum insured lah. So your what is sum insured? Your sum insured includes demolition, removal of debris, construction costs, professional fees for architect, QS, MNE, CNS, engineer, project manager, okay? And then bear in mind, there is another value that you need to remember, reinstatement value, okay? So this a certain in valuation report by registered valuer at least once every 5 years. So you need to remember reinstatement value once every 5 years. So for the buildings. And then what's covered, another thing is fire insurance perils. This is a normal thing. So because some people, they will ask me or people around, oh, end up fire insurance only cover fire things. No, it covers, like I said, protect damages and losses. So one thing is fire insurance perils, fire and lightning, bursting or overflowing of water tanks or pipe. So water tanks and pipe burst is not it's not related to fire insurance, right? But it covers, okay, under fire insurance perils. Subsidence, landslip. So other perils, what is it? Riot, strike, malicious damage, windstorms, flow ground flight flow at the ground floor investment, impact damage, earthquake, aircraft damage, okay? Other risks, okay, this is a very important that you need to make sure your building is insured against too. One of it is public liability policy. This one, I'm pretty sure many strata will use this. Public liability, such as your boom gate suddenly fall down on your residence car, roof, roof car. So you will claim under this public liability. What else? There is a, let's say, your trees inside your compound not being properly maintained, lightning happens and then the branches falls on top of your car roof, or your landscaper, okay, your gardener, okay, mowing the lands, and suddenly the stone um hit the car mirror. Okay, as long as the car is parked inside the parking lots. So there's a situation whereby without any reason, suddenly this one house, the the windows, okay, damage is because of the winds from outside, okay, pressure the windows. So that one also can be claimed. All right. What else? Error and omission policy, okay. Liability, management liability policy, machinery breakdown, burglary, money fidelity, money transfer, money loss in transaction, either caused by the management or caused by the committees, okay, because you keep too many deposit, renovation or moving move out by cash in your office. Suddenly you lost 100, 200, 300,000. There are cases 400,000 lost in transits. Okay, fidelity, office contents, equipment, all risks, personal accidents, terrorism, even to cover the MCs up to 14 people in case of death. Okay, in case you are being sued. Okay, this one you need to ensure that fire insurance is cover everything. So then we have the JMB. It's a temporary body whereby after the VP within the 12 months need to have the JMB comprised of owners, which is purchasers, and then one of the developer representative. So this one, if your building don't have 25% aggregate of share unit of strata title, you will keep maintaining it as a JMB. Then management corporation is the one that permanent body lah takes over from the JMB. So this one once strata titles are being issued. Okay. So VP also, this is the start point. Developer hands over the keys, physical possession after the CCC. This one will trigger your default liability periods and also your payment to the maintenance fee, sinking fund, and other charges under the Act lah. And then we have the default liability period. So typically it is 24 months from the VP, okay, for the developer to repair. So this one need to remember, okay, there are still many people confused that after the DLP ended, you can claim whatever under the defects for the management to repair it back, thinking that it won't use your own fund. You are thinking that it will use property managers company fund or JMB punya funds, but the truth is after the DLP ended, it will use whatever maintenance fee collected by all the owners in the maintenance fee to repair it whatever under the JMB responsibility. So during the DLP periods, the developer responsibility is for them to allocate certain amount of the money with the COB. This is provided under the Act. There is a form. I forgot tonight. What is the form? Is either form 13. So some forms lah. They need to issue. There is a calculation based on the total development value. So during the DLP, it totally used the developer money to repair the defects. Okay. And then in Module 4. In Module 4 also, I will teach you, actually, you are not only having 2 years defect liability warranty periods for your defects as a house owner. Okay, you will have additional 1 year. This one I will teach you tomorrow. Why and where it comes that additional 1 year, or in certain situation of the pattern defects I mentioned earlier, might be 6 years even. Okay, so the last one is the interflow leakage, the one that you will keep people saying the same things also. It is a water seepage from the between the floors, okay, from unit above and unit below. So the responsibility lies with the upper unit if it caused by their own plumbing or their own systems or their own negligence lah. But if it originates from the common property, common structure, common areas, then JMB and MC need to take over for that one. All right. So, and then we have this pasar rent. Pasar rent, if landed, most people familiar with cukai tanah. I'm pretty sure you guys ever heard cukai tanah, right? So cukai tanah is a quick rent. So this is for the landed, but for the strata, we call it as a parcel rent or cukai peta. This one you need to pay to the land office lah. For this one, this is taken by the state government. Back then, before 2020, if I'm not mistaken, before 2020, the responsibility to collect this parcel rent is under the committees and JMB and management. But then because of there are higher of defaulter rates, many people don't pay this parcel rent because they think that it's not really it's not important to them to pay to the JMB lah. Easy to say. So and then the one that being chasing after is the JMB or management office because the responsibility to pay the collection to collect the responsibility to collect is the JMB and management and to pay to the state government also them. So after start 2020, if I'm not mistaken, it starts with the Selangor government first. It becomes a mandatory. All the owners need to pay direct to the land office. All right. Another one that you need to remember as a owner, strata owners, there's an assessment rate, cukai pintu. So this cukai pintu, you pay to the local authority, like DBKL, MBPJ, MPAJ, MPKJ. Okay. So this one used to fund rubbish collection, road maintenance, and drainage. And the reassessment will be done in every 5 years because for this cukai pintu, they will only charge on the land that has a property. It calls it pintu. It must have a pintu lah, ada door. So in if let's say in Selangor Shah Alam area, okay, this year got like 500,000 land, but not 500,000 lands have buildings on top of it. Might be 200,000 of the land are still virgin land, or we call it virgin land, we call it as tanah kosong lah, with nothing on top of it. So in 5 years, might be in the next year or in 3 years, there will be some buildings built on that land. That's why the reassessment will be done in every 5 years, and that's why sometimes you will see your reassessment rate will increase in every 5 years. And then we have the Commissioner of Building, COB, the one that you will keep hearing, COB, 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 is a Commissioner of Building, Enforcement Officer appointed by the local authority. So each district have their own COB KL, COB Petaling Jaya, COB Subang Jaya, COB. There will be, every district will have their own COB, and this COB will have their own unique or specific SOP. So you don't just go, if COBKL, when I went there, they don't need this kind of documents, they don't need this kind of SOP, but when I go this COB, it suddenly require, yes, because every district have their own different SOP, enforcement level. Okay, policy by the KPKT, but the enforcement level will be different based on by the district. And then the one that everyone always familiar with is Strata Tribunal that handles strata management disputes. But there is another one that is a very important also. In Malay, we call it as TPPR. It's pretty long, but we just say it as a Home Buyers Claim Tribunal. So this handle the sales and purchase agreements. And also remember the one that I said, after the DLP, you actually have entitlement of another 1 year for the defect claims. So this one is under the Home Buyers Claim Tribunal. So in Module 4, we will talk about it and the amount limits also. So the AGM is pretty simple. Annual general meeting must be done in annually basis, okay? So yearly basis with maximum 15 months only. Meaning you must get it done in 12 months, but you can have grace period of 3 months. But the grace period is not a reset, yeah? This is another misconception in the industry whereby, okay, let's say your first AGM is on 1st of January 2026. So your next cycle of AGM in every year supposed to be in January 2026. You meet the yearly deadline. But then let's say you are in a situation whereby you could not really commit to the yearly deadline. So you can extend up to 3 months. Might be by April is the last if I'm calculating it correctly lah. Okay, by April is the last AGM for you to conduct. There are misconceptions in the industry. They thought that, let's say the last one, they extend it to 3 months. They do in April. Then they dragged it from the April 2027, another 12 months, and they do another extension of 3 months. That is a very wrong. Whatever it is, you need to revisit again your first AGM. If your first AGM is in January 2026, until forever, your AGM must be done in January. But then you can have extension of 3 months. That means for this term of JMB, first AGM you do until next supposed to be January 2027, but you put an extension of 3 months, April 2027. That means you are managing the building for 15 months. For the next term committee, they can only manage for the another 7 months because they need to, by hook or by crook, do it in January 2028 from April 2027, or the extension, the grace period is until April 2028 or something like that lah. You can calculate over it. Okay. All right. So this is the last topics. All right. I'm gonna go pretty fast on this. Okay. Sorry that I'm extending the time. So for this one, because we also, the introduction also taking some times. All right. For this one is a strata management handover timeline. So this is a very straightforward. First thing first, the common that you always see is that this phase, developers management periods, JMB, joint management body, and then MC, management corporation. So I will explain in this normal scenario first, and then after the Strata Management Act 2013 and Regulation 2050 introduced, there is another one that straight away from this period, they already have the management corporations. So first thing first, to trigger all this, obviously there must be a vacant position. So all purchaser will receive VP letter, vacant position letter, and letter of clearance to take keys within 30 days from the date of VP letter issuance. So this 30 days is under the HDA. So if there is a situation, certain purchasers will come to you asking why in my letters only 14 days, only 7 days. Okay, that is usually a sub-sales contract. To further clarify or confirm it, check with your strata lawyer. All right, because under the HDA is 30 days. So by hook or by crook, if the owners didn't take the VP within these 30 days, it will run. Okay, the VP will start by these days. Okay, even though, let's say your VP is January 2026, but you only take the keys in April. So your payment, everything already start by January 2026. So this one, VP is actually issued by the developer after they got the CCC issuance. So you can get the records from the developer, or if there is a situation of missing documents or whatsoever, you can check with the Jabatan Perumahan Negara under the KPKT. They have the records, but you need to file it officially lah, submit to them to request from it. Okay, because it's a very PNC documents. And then it will start developers management period, or in the act, you can find it as a preliminary management period. So this starts when the developer issues the VP letter, and within the 12 months, developers need to establish or conduct the first AGM of the JMB. There are also developers who are very confident with their projects, who wants to have an early discussion, early engagement, collaboration. Sometimes you don't even have to wait 12 months. They are already doing it within like 2 to 3 months of handing over and whatsoever. Okay, it's actually good for you to have as soon as possible collaboration also, so that you can officially discuss certain things, the contracts, the how to take over, to manage the buildings, learn how to manage the buildings and the assets, especially asset management especially. So then after that, 1 to 3 months, depends on your documents complete or not. Okay, you hand over from the developers to the JMB. So JMB established after the first AGM of the JMB. Okay, this another misconception that many people have with the JMB. One, they thought that why they can join the JMB, but why they can't join the MCs when they are the owners of the unit. But you need to remember, owners have a different interpretation in the Act, whereby even though you are a purchaser with sales and purchase agreement, without the strata title, you are still not the owner of the units. It's still under the developer. Okay, the real owner of the unit is still developer. So for the joint management body, obviously all purchasers with sales and purchase agreement can join. They can join the AGM, they can vote, they can give their opinions and become a committee members. Okay. JMB and MC, same thing, minimum 3, maximum 14 members. It's the same thing for the JMB and MC. Only different, JMB, 1 out of 14, 1, okay, from the total numbers, the maximum numbers too, must be representative from the developer, whereby office bearer, secretary, treasurer, chairman, max 2 terms, normal committee members, max 3 terms. You can't go more than this, all right? And then for the JMB, the maximum contract is only 1 year, 12 months. You could not enter a contract more than 12 months. All right. So over here, usually during this period within these 12 months, there will be opening of strata register. In second scenario, opening of strata register happen over here. Okay, in this scenario, the opening of strata register happen over here. So what is the strata register? Strata register means that when before you do the JMB, right, joint management body punya AGM, or before you do the management corporation punya AGM, you have to do a strata roll. Strata, ROLL. Strata roll search. You need to do where? Land office. So from the land office, when you do the strata roll search, you need to calculate, okay, from the, let's say there is a 500 units, 25% aggregate share units. What does it mean? Let's say A11, developer, might be Samdarbi. A11, owners, Samdarbi. A12, owners, Afifa. Okay, so that means A11 don't have the strata title yet. A12 already have a strata title. So for this A12, you need to calculate in your strata, in your CPSP, okay, strata titles, strata punya ni, from the developer that you get, you will get total share units of your own building. How much? 100,000, 95,000. And then from there, you calculate like my units and other, let's say there are 10 units already have a strata title. Calculate our share units and divide by the total development share unit. Do you get this 25% aggregate share units? Okay, if you get this 25% aggregate share units, you need to immediately form management corporations. So how you as an owner to have the strata title? You need to ensure that developers already ready with the strata register and all that. And then you have to do 3 things. MOT, Memorandum of Transfer. POT, Perfection of Transfer. Another one is POC if you have loan. Perfection of Charges. Okay, so all these 3 completed, POT completed and all that, only then you become a owner, strata titles owners. All right. So for this one, just rough bonus info, voting eligibility to join both same 7 days before you must clear the outstanding. You are not a defaulter, then you can join the AGM. Okay, AGM got 2 types. It can be a normal AGM. 14 days before the AGM, you need to send out via the registered postage to people for the notice. Or special resolution, it requires 21 days. So special resolution, if, for instance, you want to add on or omit certain house rules, on certain bylaws. So it requires special resolution. You could not go for normal AGM. All right. Proxy and nomination form 48 hours before. If you could not attend the JMB because you are in overseas, you can assign proxy to attend on behalf of you. And at the same time, you can submit a nomination form, nominate yourself, or ask other people to nominate you. Submit 48 hours before. Then even though you are not in the meetings, you can become a part of committee members as long as you fulfill the requirements lah. So the MC, management corporations punya establishments, all right, like I said, it must fulfill this requirement, 25% aggregate share units, and then you must form immediately the MC punya first AGM. And for this MC, only owners with strata title can join. Even though you have sales and purchase agreement, you could not join management corporation because you are only purchaser. You are not proprietor. Okay. So when you join as MC, so you can vote, you can become a committee members for when you have a strata title. And the difference of that, JMB maximum is 12 months, right? Contract. But for the MC, there is no cap for the contract. So that means you can go longer than 1 year contract. This is important also when we talk about in maintenance prioritization, there will be one section why this contract also is a very important. So I think I'm done here. So we will go for a 10 minutes break times. And for whoever haven't scanned it, you can scan this. So I will pass this to my colleague Ika. Thank you, Ika.
All right. So thank you, Afi, for the insightful presentation on Module 1. So we will now have our 10 minutes break. We would like to take this opportunity to invite our collaboration partners and bank to share a brief introduction and information about their product and services. Without further delay, I would like to invite Mark Ang, a Vice President in Business Banking and Business Wealth from mBank. Mark Ang, over to you, right?
Yeah, hi evening everyone. So just a quick intro. Basically we are from business banking, part of enterprise banking deposit. And we are a specific team that has been tasked to actually handle all GMB accounts, So there's a dedicated team that is actually assigned by the bank to look into this segment. So what I'm presenting here today is basically what we cover, and look at the pain points of what GMB is also going through. What are the solutions that we can actually cater and provide to all of you? Okay, so without further ado, we'll start. So what we understand most of the time, the manual fee collection issues that is faced by GMB, which will ultimately result in recon issue. That is one of the things that has always taken up time for GMBs, you see. So, and of course, with that as the main collection way, then of course there's a limited payment options that is available for all the residents and so on, you see. Then you have your problems with transaction tracking as well and compliance challenges. So these are the main few things that we understand that you're always going through. That is where mBank will actually come in to provide you the solutions. So what are the few things that we can actually look at, and predominantly that is being used at this present moment will be JomPay. JomPay is one of the one that is perhaps more being utilized by GMBs, whereby you can actually register a JomPay reference, where the bank will actually assist you to go through it and help you register for that. And after that, all the residents can actually make payment through there. The other alternative ones that we can look at is probably also do it now QR payment. So that is another option that mBank can actually look at. See, FPX Online might not be so applicable because for that you actually need to actually develop a website by itself, so it might not be so applicable. So at this present moment, what we are really looking at is for much more wider adoption will be a JomPay and of course, Do It Now QR. We do provide automated e-statement as well. And so from collection, to reporting, how does it work is if you use Do It Now or JomPay as one of the collection ways, what you do is you will get a report. Let's say, for instance, you're using JomPay, you get a report within T+1. So basically, the bank will generate a report and send to the person in charge, and everything will be recon from there. So that removes the requirement of manually doing recon as per most of the condo what they are currently doing, whereby you have to go and manually track each transaction. So you have a JomPay registered, and then you have specific reference account or a reference number that will be given to each resident unit and so on. The recon part will be done by the bank. So that is where also we also look at automated reconciliation and real-time monitoring. At the same time, the reporting, because it's provided by the bank, it is actually accurate reporting. So there'll be very low chances of or lapse of any errors. Key benefits for JMB and MC, of course, you have a digital payment convenience. You reduce your manual workload, which is the recon part, which is taking up most of the time. And therefore, it will actually assist with faster collection as well as your cash flow and so on. Right? So these are the few things that is actually beneficial to JMB. And of course, you enhance your transparency as well. So with all these solutions, what really matters is whether you have a team to actually support behind. So if you are the GMB and you're facing problems, you are seeking perhaps FD rates, or you have changes of your signatories, committee member changes yearly. So these basically, once we have onboarded the account, there will be a dedicated relationship manager which will assist you in all these matters. So where issues that I just spoke of earlier, you will actually go through the RM, and the RM will actually assist you in all these changes, be it whether if you're looking for updating of rates and so on. So there's a dedicated team. So you will have a RM assigned to your account. So yeah, that is where all the solutions can be catered to you. So with that, that's just a quick brief. So on the following slides, what we'll do is that there's a QR here. You can actually scan and leave your contact here. And if there's any questions and so on, yeah, please do scan, leave your contact, and we will actually reach out to you. One of the RM, or perhaps myself, will actually reach out to you, and we'll advise you accordingly based on what you would like to inquire from there. Yeah, so from us, from mBank, yeah, basically this is very short brief. Yeah, so anything, just please scan the QR and let us know. Thank you.
Thank you, Maa, for the introduction just now. Okay, maybe we will wait another 1 or 2 minutes. Okay, you guys can also scan the contacts here to contact our collaboration partner, mBank, okay, so that they can contact you for further information. Okay, we will wait another 2 minutes before we will start module 2. You guys can go to washrooms or anywhere. Then please come back 9:40 or 9:50 lah, around that. Okay. All right, so now 9:50 p.m. We will resume with module 2 immediately. So, Afi, you may proceed.
Thank you, everyone. So, I realized that in the beginning, since we just received all these participants, it's pretty late, right? I haven't really properly introduced myself. So, my name is actually Nur Afifa binti Abdul Wahab. You can call me Afi. So, my accredited trainer ID is actually in the first page. You can refer it back. And so, we will start with today with the second modules. We will open for the Q&A after this module 2, yeah? Right. Right. So we will start with this second module whereby our topic today will be roles and responsibility of JMB, MC, and COB, governing versus managing, committee authority, and 11 habits highly effective of property management. So for these three subtopic 1, 2, and 3, we will briefly touch on it because it's pretty straightforward. Okay. But I'm pretty sure there are many of you will be finding why COB also in this. Okay, it's because of all right. COB also will become a part of committees, members to manage a building when no committee form or there is an unsatisfactory management. Meaning the first trigger that will cause a COB will take over the property strata property management is when committee election fail in the first at the first meeting. So meanings might be not enough quorums, no one attended the meetings, or those who attended all rejects to be a committee members. So this is where you can submit to the COB for them, and they will take over the building managements. But there are many people try to avoid it lah, because the best is you are the one who handling it instead of giving the authority to someone else. And then the trigger two is complaint-driven inquiry lah, meaning finding unsatisfactory management. So due inquiry will be done by the commissioner if there is unsatisfactory management, negligence, and all that. Yes, COB can take over of that building management. All right, so this is the common responsibilities. You as a committees, whether as a COB, whether as a property managers or the MB and MC. First thing first, obviously, to manage and maintain your common property. So to ensure the upkeep functionality of the shared spaces. And then it is your responsibility to collect the maintenance fees. Again, to ensure the financial sustainability for property management. And the next one is to enforce the house rules. So the enforcement is by you to maintain order and guide residents' interactions, and then you to represent owners collectively. So you act as a voice for all owners in your decision-making processes. Remember, if out of 14, only 5 members are elected as a JMB or MC, your responsibility is to represent. If you have 500 owners, 5 out of 500 owners, okay, voices you need to present. So the role separation is pretty straightforward. Committee, your focus, your role is responsible for policy setting, approval of budgets and oversight. While as a building manager, your focus is to focus on executing decisions and reporting outcomes. But there are many situations it flips. Okay? Committee focus on executing the decisions and reporting the outcomes. Building manager are the one who do the policy setting, approval of budgets and oversights. There are a lot of situations of these flip roles. Okay, so to have a further understanding, governing versus managing. And at the end of the day, I will add on one more is administration. So you as a committee, you need to distinguishing between policy setting and day-to-day execution. So when you become a committee, you are not you need to put yourself as if you are the board of directors. When you are a board of directors, what you do? Committee, you set the policies. What kind of the policy? Like the one that I mentioned. KPKT is the one who set the policies, but the one who running, execute the decision is the COB of every district. That's why every district has a different kind of authority, SOP and all that. All right. So you as a board of directors, you are the one. When you join first as a committee, set the policies, approve the budgets, what kind of budgets and all that, and provides the strategic oversight. Then the managing gear, the governing is you, the governance is coming from you, the management is coming from the building manager. Property manager through the building manager executes decisions, handles operations, and report outcomes. This is not done by the committee supposedly. Committees are the one who doing this. You imagine the managing gear is such a for instance the CEO lah. Okay. Remember I told you I want to add on administration. Among these two, governance and management, sadly in our industry, they are lacking of this. The most that we lack is this one lah, governance, the governing gear. Okay, this one is a common lah, but then this is always come into second, whereby the most thing done by strata management, okay, managers or committees are administration. You only focus on the documentation, compilations, reportings, and all that, only on the administrative level. So you are confusing that you think that you are manage a buildings, but you only administer a buildings. You only oversees administer the buildings. That's why you could not reach another levels of understanding the situation or deliver a good outcomes. So that's why you need to really differentiate when you sit after this training, when you sit back with your team, with everyone, see whether are doing a governance or are you are doing the management, are you are actually working on the administration only. Okay. Put administration to those people like the site admins to do it. The rest of the thing is under your responsibility. And then the most important thing is for you to do a strategic tools like ours. Besides of, okay, what we put here is utilize digital platforms like Condo Master for property management and visitor management system for the Vimeos for streamlined clarity. But if you feel in the industry, there are more other systems, you can always use it. Okay, as long as utilize digital platforms. Okay, there is a reason why you need to utilize digital platforms later on. So committee authority. So the committee authority we simplify, same thing as before, 3 items. Budget approval, you need to validate financial plans for the property. That's why you need to have awareness. You need to be educated. You need to learn. You need to go for a training. You need to understand what kind of assets that you have so that you can properly validate financial plans. What you might need to fork out in 5 to 10 years money. Okay. So you need to have that knowledge. And then contractor appointment. Select service providers for maintenance and other tasks. So you don't have to be jack of all trade. You don't have to be master of everything, but you need to be someone who is resourceful to understand what you are doing, what you are deciding. And then enforcement of house rules. This will ensure compliance among residents. I'm pretty sure many committees are pretty strong in this one lah. Enforcement of house rules. But you also need to learn what is aligned with the acts, what is actually contradict with the acts, with the act. Okay. And then, okay, the last one. This will we have 30 minutes, right? Okay. 11 habits, okay? This is gonna be, I'm trying not to make it too long. but I'm trying to make it comprehensive but still relatable to all of us. So for this subtopic 4, it will be 11 habits of highly effective property management that we hope you as a committee members adopt these habits with you. All right. First thing first, don't gaduh among ourselves. This, I'm pretty sure when you read this, there are many things that playing in your minds. Might be before you come to these meetings, to this training, you're just having a fight with your JMB members or committees. So first thing first, don't gaduh among ourselves. You need to work together like a dream team. So what is the common beginner mistakes? All right. First, fail to communicate clearly. So this happens, okay, when you are still novice, you are newbies, okay? You're newbies, you just join as a committees, and then you might coming from a professional level, you are engineers, you are architects, you are lawyers, you own a startup, you are a CEO, you are board of directors, you have a multi roles, or you might a house husband, housewife, can be anything. But when you join, you feel that you need to show to everyone that you are an expert in your industry. You are an expert in everything. You master of everything. So when you talk in you are using jargon words. Let's say you are auditor before this financial. Then when you talk to other members, they will feel like you are looking down on them. And at the same time, whatever you are trying to talk is not being conveyed properly. So the best way is that in any settings, especially in strata properties management, okay, you have a very diversified people background with you. And not everyone have the same understanding. Even me back then, okay, because of I'm pretty not experts, but I have pretty knowledge in most of the skill sets in the industry. I tend to forget myself whereby I tend to use jargon or technical terms when I talk to committees or talk to people to execute some things. It might look in the beginning you are seems like a professional, but in a long relationship, it can cause dissatisfaction or misunderstanding because people could not really understand your level of language. Okay, there's a Malay, we call it as sekufu, kan? We must be in the same wavelength. So same with your team. Use simple language, avoid jargon. Okay, try to avoid any jargons. Let's say I'm keep using AGM, AGM, AGM. There might be certain new people, you should not laugh at them or look down at them. They never heard what is AGM. So the best way is try in the first meeting, use in the full term annual general meetings. If there is any terms during my session also, I'm using a jargon, I'm truly apologize. You can always chat and ask me to clarify what it is. But and then you need to encourage questions. Don't act like you are master of everything. I know everything. This really happens. I'm back in my years. I usually see this happens, especially within the communities. They will put them as a superior. Seems like, oh, you, we don't need the questions. You listen to me, you understand, you just do whatever I'm telling you. No, it doesn't work like that. You need to work as a dream team, and then summarize key points if it's possible, because when you are able to summarize key points of whatever people are talking in that settings, okay, in their rooms, meaning you are a good listener. You are listening to people, okay. And that brings us to not actively listening. So, like I mentioned, when you become a new committees, you might be very passionate, very excited. Okay, you're very excited that you want to talk, you want to tell. You just join as a strata owners, or this is your first strata house. So you just first encounter, oh, boom gates fail, security fail, cleaning fail, whatever lah. You see like everything is fail in your eyes. Even the design, the building design, the developer failed, everything failed. But in the truth is that it is common in strata industry. Okay, for those who already managing for 10 years, they already see this a frequent occurrence. For the first time, you might be feel like excited to share, to make it like everything done in a short of time. So instead of doing that, let people talk, and then you put more actively listening. From there, you might find a gap, or what is not being discussed yet, or you might can find a solution even by actively listening. All right, and then avoiding conflicts. This is another common scenario. You might think it is especially Malaysian lah. We are too kind. We are so scared of conflicts. We are like we don't want to hurt other people or offending other people. So and a lot of us, many of us are introverts. So when you are introverts, when you join, you understand that there is something wrong, or might be the intonation you don't like, or triggers you. Even whatever the suggestion is not some things that is profitable or some things lah. But because of you shy away from the confrontation, this will unresolved issues can fester over time. Trust me. So you need to learn how to embrace healthy conflict. Okay. Arguments doesn't mean you are a bad person. Argument meaning that your team having a healthy discussions. With the arguments, you might can find the loopholes of the issues. Why this avoiding conflict is important? Because there are many committees in the first, second terms, they might look like a happy family, but in third terms, they start turn against each other because of they said, you remember during the first term, you are saying this to me, you are doing this. Oh, I don't like you from the beginning. And even, okay, this is a fact, there is a legal issues keep going for more than 5 to 10 years, okay, between committees, the current committees, the previous committees, the previous committee with the previous committees, keep fighting at court. It's not tribunal anymore, court, high level of court. Just because of these conflicts, you could not put aside your ego. The unresolved issues keep festering over the time. So embrace healthy conflicts. If whoever having a conflict with your committee members right now, try to find one-to-one talk. Might be you are sharing the same, what is it, FIFA World Cup teams, Argentina, like later fighting. Go and watch Argentina football game together. Maybe you can reach a common grounds together. Okay, and then taking on too much responsibility. This is also too kind, whereby feel like you are the only person who understands strata property management. You are maybe your background is strata property, or you are the only person who understand the technical because your background is an engineer. So you're saying that okay, don't worry everyone, anything about technical, I will I will handle it. But do you know how many assets even a simple building has? Technical stuff that you need to take care of. Is it very impossible? One person can handle all the technical things in the buildings. We have a lot of assets you need to manage, especially on technical. So delegate your responsibilities. It is okay if your committee members, the background is a financial and account, send them to the training. Or you want to send them to the training. Ask your vendor, ask your contractor, can you come over, because we already signed a contract with you, can you come over this weekend to teach us the committee about this system, about this piping system? Learn. You don't have to be master. You need to understand the fundamental how the system works. Okay? And habit 2, hire a good property manager. So this one, first thing first, many people didn't do thorough research. So you fail to properly vet property managers that end up you hire and qualify inexperienced PM. So this one, the best is for you to interview multiple candidates, and then you need to ensure that find their backgrounds, okay, their experience. That if you are residential buildings, it's the best is you find someone who have residential experience. So they know if, let's say you start the defaulters punya SOP, how to prevent the defaulters fight, the defaulters disputes, okay, how to do it and everything, the SOP. So same thing, if you're managing office building or commercial, find someone. Don't go, you are managing a residential, then you hire someone with a background of managing asset management or factory. It will be a different, or even of office, it will be a different office after 5, after 6, there is no one anymore. Residential, 24/7, people are living there, okay? Another thing, when you look at the PM, okay, when you look, one of the important factors in the property management is financial accounting. So you need to identify whether the property management accounting teams, okay, their HQ and all that, are good in property management accounts, because property management account and business account is different. Please remember this. There are many people who send their staff for accounting training. They thought that they can use that knowledge to handle a property management accounting, but they failed miserably because they actually sending them to the business account. Based on my years of experience, I have been trying hard looking for a property management accounts. I keep going this organizer and all that just to have my staff, my committees to learn property management accounts. But they are not that many in the industry. It's very hard for you to find. That's why when comment catcher have these fundamentals of their own basic accountings and advanced accounting in property management teach to their clients, that's a very good, whereby we want to ensure everything is done professionally and also everyone is held accountable. They know what they are doing. You are not messing up with the accounts of the property management. All right. So neglect the references. So the neglect this one, okay, you have to be, is it good for you to become a good friend of other committee members from the other buildings? I know that there are some residents or committees, you are too over pride and over proud of your own buildings, even you are neighbors, that you feel like, oh, I want to show them that they are even this one row, I don't want to say where, okay, it's a very high-end properties, they are competing with each other. They are finding what is the rates, what is whatever they are doing, they keep wanting to show them that they are better. But when they are doing that, they are actually making more mistakes. Okay, so you, especially when you are a new committee members, it's the best for you to always check, get references from other people's, ask for other people's, ask for other resident, for other committees, but make sure it's neutral, okay? Not some things that come with some other intentions, some malicious intentions and all that. Even for instance, for our own company, okay, even though we are a system provider, we internal audit our own clients because we want to do what? To make sure our system, whoever using our system, are up to the professional standards, no hanky-panky suspicious activities. So if we have a very whoever the good clients, okay, let's see, they really wanted our advice and all that, they do a cross-reference checking with us, we have evidence because we are doing our internal. So if you are still new, you might don't have that internal audit system yet, it's the best for you to always check with the people industry, if your neighboring buildings and whatsoever, if it's a good property manager. Okay, if you are a seasoned one, the best is for you to always have your own internal audits. Keep the records with you so that you can always keep suggesting or giving to your another terms of committees to refer back to. Okay? And choose based on personal. This is the common one. This is the common mistake that people always do. The cheapest might save money in short term. Remember value that I mentioned earlier? The cheapest might save your budget in short term, but your property value might compromise in the long term. So it could lead to poor service and increased vacancies. Let's say you are too cheap in everything, and then those who you can hire are the one with no certification backgrounds, or even not certification backgrounds, is too freshy, or even you are paying them peanuts. When you are paying them peanuts, there will be more dissatisfaction. So high turnover rates. Okay. Besides, you need to remember your buildings is the one that have a loyalty towards your building is you only as a property owner. Other people don't have a loyalty towards your building. Their loyalty is toward their career and their salary. Okay? So you can't force people to have a loyalty of your property if you could not respect them. So based on price alone, this first clarify your fees and services. If let's say you die don't want to give people, okay, even if they performing with the KPI, achieving 100% collection rates and all that, you said there is no um bonus or anything, put in your contracts. Okay, don't make people assume that there will be some bonus performance and all that, because in the beginning you need to have this clarified. Don't suddenly you have this kind of discussion, oh, we want a bonus from you, and then start infighting happens. All right, understand all fees and what services, what is the market price, what is the best. The best is that it is not the cheapest or the highest, the expensive. It is whether the value that you are putting, the price that you pay, is worth it for you to pay. Okay. Next is no clear expectations from beginning. From the beginning, you just okay. I sign up your contract. You are come over and manage. Then you just pass it to them. But then after some time, after a month, after 2 months, you are having an internal fight saying that you are very bad. You never update us or anything. Make it clear from the beginning what kind of communication that you would like. Means like as a committee, you prefer to have a monthly, weekly, bi-weekly. Okay? We don't prefer in a WhatsApp. We prefer in a Telegram. Establish your communication preferences. Okay, whatever expectation. Okay, we want this kind of services, this kind of things. Don't be scared to put down your demands, because while you are finding someone who has the same value working with you, those clients also actually, if they are a good one, they will find a clients who meet with their same value. Some demands you might feel like too demanding or overwhelming, but if there is a clients out there who feel that it match with them, it's not even demanding, then why not? Rather than you compromise right now, you are just because you just want these people to come in, and then after running through 6 months, something like that, you are fighting over this expectation, the demands that you want, that you compromise in the beginning. Okay? And then ignore strata knowledge, like I mentioned earlier. Make sure these people have a background of the strata. Sometimes you're trying to hire a security company, but the security company experience background might be only for the factory. Factory and strata residential is very different. So make sure you can assess candidates' knowledge of the strata market. But if you as a new committee, you are not even having a good strata knowledge, how you want to assess other people's strata knowledge? Okay, so this is why even you as a committee, you need to attend, have brush up your knowledge, and then that is where if you could not, maybe find someone's consultant or a strata retainer lawyer you hire, you check the credentials, check their experience. Okay, whether it has a relevant certification, whether it experience in managing similar properties, residential with residential, commercial with the commercial, office with the office, industry with the industrial. Okay, and good local market knowledge, because some people their backgrounds might be coming from the um, UK, Scotland, or even Australia, or they might not have that good local market, like KL market and JB market is different. Kuching market in Selangor market might be different. So having a good local market also is a very good plus points. Okay, and this is the common fights that we have in the industry. Skip the contract review. You are not properly reviewing the contract thoroughly. Okay, One of it is no exit plan, exit clause in the contract. This is very dangerous. What you need to ensure that have in the exit clause in any property managers and all that. One, termination clause. That so that you won't, okay, let's say they don't reach certain KPI or they do some hanky panky or whatsoever, okay, but then because you don't have this exit clause on the termination, you have to fulfill their contract levels, even given them sometimes before you, means like let's say you are in a very trouble situation, but you still need to serve the contract for another 12 months or 3 months. You could not directly sending to them termination and bring in some more a new experts or the one who really reliable to correct things. Okay, termination. Besides of that, asset financial handover. This one, after let's say termination or they pull out from the projects or something happened that caused the early termination happens, right? Post-termination responsibilities are the most in fight between committees and property manager. Okay, usually after the termination, property manager will say that, oh, my job is done. There is no clause in the contract saying that I'm responsibility to ensure that a proper handover of the financial assets is being done. Whatever in my capacity, this is what I'm handing over to you. So what happened was that the committees will hold the payments for that property manager, and then the property manager will send the LOD to the committees to release the payments and keep going back and forth, court legal, court legal, court legal. But the real issues of your building defects, your financial situation, all that's unresolved because you are having this fight of post termination responsibility. So ensure that when you go back later as a committees, check your contract. Is there any exit clause? Is there any exit plan? What you should do in a situation of termination, what you should do in a situation whereby you need to have a handover of financial assets, what you should do if they are not doing a proper asset handover, okay? And the most important thing is digitization of PM industry. Please remember and understand that we are running into, even now there are a lot of data center, we are running into the IoT, AI and all that things. So the assets become bigger and dense. Okay. If you keep doing it manually by writing everything on a piece of paper and everything, you filing it, then instead of this one rooms, you need another rooms to have your files and end up your files is nowhere can be found after even after 1 year. That's why digitization of PM industry is very important. So find a property manager, okay, who use a digital systems for their property management system, for their they are not doing manually, for their accountings, for your payments, for your receipts not being done manually, your tenants management, your visitor management. Make sure all of this is digitalized. Okay, rent collection, tenant communication, and all that. So, habit 3, do not accept bribery and corruptions. So, for this part, I have received a question. People are questioning why this is even habits, why you need to, why we need to highlight this, and why there is a bribery and corruptions. Why this is an issue. Okay. I want you to imagine, or I'm pretty sure many of you here coming from the SME, MNC, or GLC, or those multi-billionaire, multi-trillionaire companies. In your company, the multi-billionaire, trillionaire, MNC, or GLC's company, if you are a board of directors, if you are a CEO, if you are a manager, do you have a power access to millions of transactions? Do you have a direct access to see a millions of transactions going into account and approve it? Do you have a direct access to approve millions of contracts and tenders? Do you have it? No. even if you ask even Elon Musk, he also don't have a direct access to all of his trillions of transactions. Okay? Whereby in strata property management, let's say lah, not 100% collection, 40% or 50% of collections, busuk-busuk pun, okay? The lowest might be like you can get every month is about 60,000 per month of money of the collection. So 60,000 times how much? 60,000 times 12 months. Hold on, let me calculate. 60,000 times 12. 720,000. Already more than 500,000 in yearly basis. That is the lowest lah. You might can collect 40 to 60,000. In an average, okay, in average of a monthly collection of any strata buildings, it would run from 200,000 to 500,000, 200,000 to 500,000. So let's say that we take that your monthly collections with 100% collection is 500,000 monthly. Do you think your contract expenses only worth 50,000 or even 100,000? Even 50,000 and 100,000 is a lot of contract standards, correct? Usually, if your monthly collection is 500,000 millions, that means your contract and tenders will worth about 400, reaching 500,000 also. In monthly basis, not even in yearly calculations. So, as a strata manager, as a committees, you might be a house husband, a housewife, or even executive junior level in your own company, or maybe can be a board directors of CEOs and everything. Suddenly, you are being given a role, responsibility to manage, and you can have a direct access. You can see right away, oh, this month we receive a collection of 500,000 ringgit Malaysian. And then this month I need to sign off payment voucher, I need to sign off a contract deals and everything in 500,000 worth deal. So that's why this is a very powerful industry and a very fragile industry that prone to bribery and corruptions. And that's why it's not a surprise if there is a money loss in transaction amount 400,000, 500,000. It's not a surprise. Okay? So, first thing first, the mistakes is that you are thinking it is normal. Accepting gifts, everything, all the coming from, because you need to understand, besides you, other people, they are aware how much money running in this business. Do you know, I won't tell this, this is something new. There is even, okay, illegal lenders, along lah, even become a chairman. You know, this is industry, that is how powerful this industry is. So that when people are thinking that it's a normal, you don't even know the law, you don't do research, you don't understand, you don't have the etiquette. This will happen in the industry. That's why the value will compromise and then not report a suspicion. Okay, I will share with you. So there's a situation whereby in the industry, this exec or admins, okay, they are handling cash transactions. So all the deposits, all the payments, everything is not cashless, it's in cash transactions. This person jumped from one building to another buildings after taking a huge chunk of money from that buildings. Because there is no tight regulations. And then even when the MCs or the JMB aware about this, they are feeling like, oh, I'm feeling bad for this person. I don't think that this person will change and everything. But what happens? They don't report that person. So that person keep jumping into another building, going into another states. And after a few years, they are coming back because you don't have these regulations, tight regulations. So when it happens after a few years, it cannot be traced. So the issues, okay, the one will be affected is the genuine committee, the genuine buildings that want a good people to come in. But how we came to know about this because one of the system they are being using is our system. So we already flagged this person. So when they are written to us, we identify that, oh, this is the person who taking. So we notify the committees. This is a person that has been doing. So what if we don't report, we just put a blind eyes about it, this will keep happening. But then the first person who need to report this is actually the committees. Committees are responsible to report this in the beginning because there are people in the industry, they prefer to keep this kind of person. Might be they are good in talkings, okay, might be it's cheap to hire them or something like that. So please bear in mind this industry is very powerful industry, so please avoid this kind of situations. And then our habit 4, set clear goals and monitor performance. So this is another thing that I want you guys to have a mindset whereby there are a lot of beginners, they put a vague goals because you are too excited, you are too like want to resolve everything, but you need to remember AGM must be done, annual general meeting must be done in 12 months, yearly basis. You don't take about the grace period of 3 months, the maximum is 15 months. Just take it 12 months. So just remember your role in your seats right now as a committee is only 12 months. So in within 12 months, you don't put too much KPI. You don't put, oh, I want to resolve 20 things within 12 months. I want this team to resolve. It will end up burn out your team and even you. Your team means your committees and also the property managers. Even you have a good property managers, if they burn out, they could not really deliver work effectively. So the best way you use the SMART criteria, whether your goals are specific, is it measurable within 12 months? Is it achievable within 12 months? Is it relevant within 12 months? Is it time bound within 12 months? Don't, sorry, don't rush, okay? Don't rush. After 12 months, if you are doing good in these first terms, okay, let's say you can deliver 3 or 4 items, but it's impactful. Next terms, you'll be appointed again by the resident because they have trust in you, and then you can carry on another things that you want to do. Okay, so don't have a vague goals, don't too much. Okay, so neglect regular check-ins. This is also, there are situations also, they don't care. They don't check their security, they don't check their cleaners, they don't check their lift vendors, their genset vendors, chargemen and everyone's. They only check once a while with the MO, management office. And then when you go to the management office to ask about the vendors, I don't know. You have to do this regular check-ins, okay? Habit 5, remember you are handling assets, millions. You are very powerful in a powerful industry. So you don't do it cincai. 500 millions per month and 500,000 per month equal to how many millions in 12 months is not cheap. Okay, it's not a very, it's just like, oh, I have 500 million to spend today. No, okay, it's a lot. So you have the same seriousness as managing a company. You are the board of directors. The governance is in you. So remember, there are a lot of people understanding the importance of precisions. Okay, they think that, oh, okay, it's okay if I do this mistake, if we only achieve 50% of collection, 49% of monthly collection, it is okay. No, you have to give everything that you have, but if God says otherwise, it is out of our control. But the thing is, we will reap what we sow. Okay, how much we put our efforts, that will what we get back. So treat every task with care, approach each responsibility with the seriousness, and please be a responsible person. Don't avoid taking responsibility. Accountability is very important in this industry. Okay, own up to your actions. There is nothing wrong making a mistake, admit it, and then amend. There is nothing wrong of doing it. You are become a bigger person people respect you more. There are a lot of situations because of the pride coming first. So many people are keep blaming, pointing fingers to each other instead of taking accountability as the whole team. Because this is not something like rocket science or something that, okay, doing A, you get B, doing B, you get C. No, even in strata management, it is a lot of uncontrollable situations. That's why you need to work as a team. There are a lot of situations that will encounter, oh, we make a mistake in our decision. We fail in our decision. So what you do? Admit, take accountability, and then you amend it. As simple as it is, but the hardest thing that people can do. Habit 6, frequent update with the resident. It's the same thing. I know it's overwhelming as a first-time newcomers, okay, and first-time in committees, that you have a lot of issues coming in, then suddenly you need to. People's always, they are not just like, oh, we want an immediate resolution. No, as long as there is a progress, they know that you acknowledge their situation. Oh, okay. They are not just be quiet about my problem. I'm having this kind of problem, my building defects and all that. It seems like they having a progress. They are learning, searching, taking an actions. What actually can be done? Oh, they are also having a dilemma how to resolve these issues and all that. Oh, they are going into the authorities to understand more things and all that. As long as you have frequent communication, updates, follow up, don't put them in a blind spot whereby they will be like, what is happening about my building? I'm purchasing 400,000 property units. What is happening to my 400,000 property units? Okay. And then ignore feedbacks. There might be someone who very pride and proud. They feel like you know nothing because you are not in committee. We are in committee. We know everything in depth of the situation. Since you are know nothing, your feedback is not valuable. I don't want to hear your feedback. No. Any feedback, even you found it stupid as it is, it might have some gems in it. It might have some miracle magic in it. Even we, as a system provider, okay, when we do the visitor management system and also the property management system, we still take all the feedbacks. We don't say that, oh, this is not related or this is not something's up to the industry or whatsoever. We just take it and learn. There might be some hidden magic or gems inside the feedback that we receive. Okay, feedback is important. Habit 7, post financial report every month. I understand that in the beginning, if you're building already in a situation of financials issues and all that, too many issues and all that, just like the first, always update, or this is the issues that we have, the financial, give a timeline, set a clear calendar. Okay, we just take over this. We might need about 2 to 3 months to clear with the audit, to clear with the report again, to do some reconciliation and all that. And then we will start do a monthly post financial reports. Or in the beginning, you just post whatever report that you have, but put a caveat, put a terms there. Okay, this is a ongoing process of rectifying. So as long as you have a justification, and then you make sure people know that there is a consistent reporting schedule. Might be in the beginning, it requires 2 to 3 months for you to clear everything. And then you said that every month on this certain date, we can commit to provide a reporting schedule. Okay. And overly complex terminology, like I mentioned earlier. Don't use jargon. Don't use a very complex terminology. You will keep having received more people asking you back, more efforts, more times you need to waste on explain to people again. So just post whatever that people actually wanted to know. How many collections that you have? Okay, this month got how many collection? How many spending? If you want, okay, so this kind of record, if we achieve 100% collections, what can we as the whole committees can have a rewards with each other, something like that lah. Like what is it, apa, um Hari committee, community day, committee day with the residents, celebrating residents, Raya Day, something like that. Habit 8, keep your defaulters below 5%. The healthiest, okay, the good habit is that you have a healthy defaulter below 5%. That means your collection is at 95% every month. So that you can have more reserve, you can have more sinking fund, you can have more money for future punya repairing lah. Okay. So this one, establish clear SOPs, okay? Lack of clear communication in terms of payment terms might be in your invoice billing is not clear. Okay, when is the due date to pay? How much the late payment interest will be charged? So you need to make it clear. And then you need to make it clear by this certain day after the 14 days on day 15, okay, you will be charged LPI, and then if you still haven't paid, you will be blocked the access card. Having that SOP clear in place first. What is your defaulter punya procedure? Okay, what is the payment punya requirements? So when you have this, all the SOPs, all the detail, everything, outlining things, even residents might overlook and want to blame you, they could not. Because at the end of the day, it is their fault who not read it properly, and you could prevent your committees from being blamed. And this will ensure that sometimes it's only like 1 to 3% who are having these conflicts. Other people, if you have established clear SOPs, you can achieve this 95% collections. Trust me, you can achieve it. Okay. There is a building from even 30 to 40% collection. I managed to make it 90% collection in 2 to 3 months. This is it. This is possible. What you need to do is this. Okay. And then poor follow-up processes. So this, if you're building already in a very, very bad situation, only 20%, 30% collection, there is a building with only 10% collection. It's a very sad one. Okay. You have to have this a very tight follow-up processes. All kind of methods you need to do. Not just, let's say you are using Condo Master or Vimeos, right? So you are issuing a bulletin, notices, reminder letter, and everything from the systems. You still need to post in the notice board. You still need to call, email. Okay. If you have to blast in the WhatsApp to remind everyone, please make sure pay this by this certain date. Do it. Follow up your processes. Okay. And then habit 9, 10, 11, two more. Bear with me. Check critical